Hello everyone and welcome back to the Smart Money Insight. My name is Rain and today I would like to talk about a stock that really caught my attention, and this stock called Tyson Foods. Well, this company, Tyson Foods, is one of the largest food companies in the world, primarily known for producing protein-based products such as beef, chicken, pork, and some prepared foods, alright? Now, today, while you probably have seen that the overall market like the S&P 500 seems to be stuck in a bit of rut, struggling to rally further, especially after testing the 6,000 levels, and seems that the bear is just about to come, then I would say this Tyson has been quietly making a surprising trend reversal and a price jump. Now, probably I would say as per today, the effect of President-elect Donald Trump policies seems to be starting to wear off, and the broader market right now might be dealing with a more serious concern because the data lately is showing that inflation could potentially come back. But this Tyson is really defying the odds, especially very recent, I would say. Now, so the question is, what's really going on here with a company, with the stocks? Is it just a temporary bounce back for a company, or could it be more to the story? Probably changing consumer trends, or probably the new strategies implemented by the company that finally pay off. Now, let's break it down and see what we can learn from this recent rally. Now, let's take a look at its dividend history starting from 2016, where the dividend for Class A shares was just about 15 cents. And fast forward to today in 2024, well, the dividend has grown to 49 cents per share. And that is more than 3 times growth in less than a decade. And if you do observe that throughout years, okay, let's say taking 2017, for example, where the dividend payout for 22 cents, and then it grew up to 30 cents in 2018, then 37.5 in 2019, and then it grew up more and more, 2022, given 46 cents. Now, if you observe that throughout the years, the company has been consistently increasing its dividend payout. And even if you take a close look during 2019, which is a we know it's a COVID-19 pandemic, this company, Tyson, has never wavered its commitment to its paying dividends. And I would say that this consistency not only builds shareholders' trust, but also makes this company, Tyson, a standout in the food production sectors. Now, I also want you to pay attention to this period, all right? Well, this is somewhere around, I would say, November 2023, as it marked a strong reversal towards a bullish trend. Well, simply because, as you can see here, the Tyson Foods announced its dividend increase from 48 to 49 cents per share. And this pattern signals confidence in its financial health. Now, let's take a look at its fundamental value. Now, let's take a look at its PEG ratio. Well, for Tyson, the PEG ratio is 0.32, and compared to its industry peer is at 0.96. As you can see that the Tyson PEG ratio here is notably lower than its industry norms, suggesting that the stock might be undervalued relative to its growth potential. And also do note that for PEG ratio less than 1, I would say typically implies as an attractive valuations by traders, especially if future earning growth is anticipated. Next, let's take a look at at the debt to equity ratio is kind of important, just in case if we stay at the high rate environment for long. And for this Tyson, the debt to equity ratio is 0.52, and I would say that this number is a moderate level, and this number also demonstrates its financial flexibility to invest in the growth without taking on excessive risk. Well, this type of stock suggests a healthier balance sheet because, well, I would say it has a strong edge in both low and high interest rate environment. Next, let's take a look at its price to book ratio. For Tyson is 1.23, and for industry peers at 1.40, and for the market is 3.68. Well, if you look at this ratio, definitely is lower than many industry peers or even the markets. And that indicates that the stock may be trading at a discount to its book value. Next, it's also kind of important looking at its projected EPS growth, earnings per share growth. Well, for the company, the Tyson's is at 12.90%. Well, I would say that this rate is kind of a very competitive in its sectors. And this expected growth rate shows that the company Tyson is poised for expansion and profitability in the near future, which is critical for both momentum and growth investors. Well, this strong EPS growth projection, I would say it supports the case that Tyson can increase its earning, translating it into potential stock appreciations, and that is making Tyson a compelling buy for both value and growth-focused investors. Now, let's take a look at its technical data for Tyson company. Now, let's take a look at its historical long-term trend, all right, by looking at its weekly chart. Well, for this stock, Tyson's, the stock has been demonstrating for a steady long-term upward trend. I call it a key trend. There's a blue channel, which is suggesting an overall bullish trend with a defined long-term support and resistance level, all right? Then I draw a mid red color channel, which define more towards a mid-term support and resistance level. And finally, you can also spot out, I would say, a very strong uptrend recently, all right, inside this black color channel. So there are three trends over here. Now, let me plug in the 200 days moving average, and because this is in a weekly chart, so this is going to be weekly adjusted line, this purple line, all right? And if you notice that this price seems just about to cross this purple line, and I would say that this is very important because if you notice from the previous trend or pattern here, that usually the moment it crosses above the line, then eventually it will be pulled back towards the line. So for example, if I pick up this point, then you see that it's pulled back towards the line. All right, so it crossed over again up to a certain point, then it pulled back again. And then same thing here, it crosses the line. Okay, it flies up before eventually it pulled back to the line, all right? So why this junction is so important? Because the moment that it crosses the line, and let me draw a projected, let's say, 200 moving average here, right? The moment it crosses this line, there will be a day eventually that it goes back, it pulled down back to the line, to the 200 days moving average here, all right? So with that, it means that right now, at this point, at this junction, it seems that we still have a room to rally up, all right? We have this opportunity. We have a room to rally up before eventually correction comes in and pull the price down towards the moving average, the purple line. Now, let's take a closer look by referring to its daily bar, all right? And let's start plug in the 50-day moving average, the red color. All right. Now, if you remember, somewhere around November 2023, when the company announced the dividend increase, And then not long after, there's intersections here. The red color cross over the purple color here. This is where we call a golden crossover, all right? And why this is important? Because this indicator usually project for a long bullish rally. And right now, today, the price is sitting somewhere around, I would say, $64 level, all right? Now, let me plug in another moving average here, the 20 days moving average. And this is so important because right now, if you see this moving average 20, the yellow color, all right, it seems that this yellow color just about to cross over the red color here, just about to. Now, why this is important, as you probably know that when or after crossover happens, usually these two lines create what we call divergence and convergence, all right? So divergence is something like this. It's open up and it close back. It's called convergence, all right? Now, let's take a look at its historical sample. Now, if you observe, all right, crossover happens, divergence happens, convergence happens, all right? Crossover happens again, and then the divergence, it creates divergence and convergence, all right? Then it crosses over the line again, and then it creates divergence and convergence. So divergence is actually the price. If you notice that when divergence happens, right, over here, the price rally up, all right, until at the time before it converts back here, all right, and then the rally or the momentum has weakened and finally it drops back, all right, and this is where the line between the moving average 20 and the moving average 50 will join back. Now, let me show you what is happening right now. Since that this yellow color just about to cross the red color, all right, it means it is just about to create divergence over here, all right. And again, usually when divergence happens, then the stock will rally up. And I would say it is kind of critical because when this divergence happens, this is a very close to the resistance level, which is, I would say, well, around $64 level, all right? Because that this divergence, when the divergence happens very close to its resistance level, so when the divergence happens and then the stock try to rally up, and then what happens is that usually or most of the time that this divergence will push the price to cross over beyond this $64 value, and it will test the next resistance level, which is around, I would say, around this level. I would say around $72 level. But if pullback happens, and considering because currently it's kind of in the bullish setup, so probably that it drops and it will linger around $60 level, which is, I would say, the current support. Now, so let's analyze further its sentiment later by using its option markets. But before that, let's take a look at its smart money opportunities here, all right? And to do that, I'll be using my system called Trader GPS system. And for those of you who kind of unfamiliar with this system, well, I'll say that the Trader GPS system is one trading system that I developed myself to develop trend opportunities. And one of its standout feature would be its ability to detect a potential smart money. And by now, I believe that you understand about why a lot of traders are so eager to identify this smart money opportunity. Well, I would say that this smart money opportunity is the time where the professionals start to time or accumulate their positions in the stocks, and these activities often drive the price higher with relatively much lower risk. And the lower risk here means that when the market moves against us, not in our favor, then definitely there's a pullback, right? But the pullback, the extent of this downside is typically minimized, all right? So by learning to spot out these smart money opportunities, I would say this will significantly increase your chance to become a consistently profitable investors. Now, let's take a look and activate the Trader GPS system, all right? Now, to activate the Trader GPS system, it's very simple. With a click of button, then the system will automatically compute and analyze for you. And your job to identify this smart money opportunity, just try to spot out this arrow, like this green arrow, like this one, or this one, and this one. It's very simple, right? Now, let's take a look back to see what happens on the 12th of November. When the arrow comes, means that the smart money potentially identified during the day. Now, this is very exciting. Why? Because in general, the market, like S&P 500, for example, since 12th of November onwards till today, I would say the market dropped probably about 2.1, 2.2%, all right? Instead, when the smart money came into the stock, to Tyson, this stock defied the market and it rallied up higher, all right? This is the reason why it's very important for traders to identify the smart money opportunity. Now, let's take a look back historically when the smart money opportunity comes into the stock. For example, like this one, all right? The moment that the smart money comes in, they join to the stock and then it rally up higher. So as investors, that you just need to identify the stock, all right, and you jump just right in on the momentum to profit from this rally, all right. And also this one, when you spot out the green color, tells you identify the potential smart money came in on a day, and if you write it, then you make the same profit as professional investors. As simple as that, all right? And also for this one, all right? And then the moment that it spot out the smart money opportunity over here, and then the stock rally up, all right? And again, so let me underscore the importance of finding this smart money opportunity, all right? So for those of you who want to find out more about this Trader GPS, then you can check the link in the descriptions below, all right? Now, let's take a look at its implied volatility smile chart. Well, for those of you new with the chart, let me explain on how to read the chart. This y-axis represents the implied volatility level. This x-axis represents the strike price. This represents the volume of the transactions. And then the blue dot represents the put options, and the red dot represents for call options. Now, when you look at this put options, all right, the volume is concentrating around the $60 strike price, while the call options have a high volume at around the $65 strike price. Well, this could indicate that traders are simply hedging or speculating around these two price points. Well, the high volume at the $60 for puts, this suggests a defensive positions by traders in case of the price drops. Conversely, the high volume, all right, at this $65 for calls could represent bullish sentiments, with traders speculating that this Tyson will move upward. So I would say that this range, the $60 and $65, you can take it as a support and resistance for the current sentiment. Well, take a look at its IV, the implied volatility curve here, right? I would say it shows a bit skew, especially for call, all right, for call side at higher strike price. And how you see that is very simple. Now take a look at the red dots here. Suddenly there's a very steep curve, all right? This is what I mean by the word skew here, right? Now this skew might imply that the market participants are just simply more interested in the upside potential for Tyson's, or they're just simply expecting higher volatility in case that the the price increases. So that simply means that when this price just goes beyond this $65 strikes, right? $65 level. The moment that it's go beyond this level, this $65 level, then there could be bigger and faster price swings because the market expects more actions at those higher prices. Now, for the put options, which is in blue, I would say show a similar pattern, but with slightly lower IV, lower implied volatility than calls at corresponding strike prices, which suggesting just a normal like a demand or fear around the downside protections. However, when you take a look you look at the chart as a whole, then I would say it seems that the traders right now are placing more emphasis on unexpected strong upward movement than the downward risk, and this simply reflected in the skew happens in this volatility chart. All right, now let's take a look at the volatility trend chart. Let's take a look at this implied volatility trend chart, and for those of you kind of new with the chart, let me explain on how to read the chart. Well, this y-axis represents its implied volatility level, whereas for the x-axis represents the date. The blue color represents the put options and the red color represents for the call options. Now, as you can see yourself here, both the put and the call options, all right, it rose steadily, all right, up to this date, I would say around this 12th of November, all right, before there is, it declined, all right, it declined sharply. Now, this significant drop in IV in the implied volatility suggests that there's a reduction in the market uncertainty, which often aligns with the increase in investor optimisms on the bullish sides. And then, if you look at these points for the call options, all right, after the drop, then there is a slight spike, then it stabilized. Whereas for the put options, all right, it continues to decline here. So I would say that there is a divergence, and this divergence may indicate that bullish sentiment is prevailing, means that there's a reduced demand for protective puts as confidence that the stock performance will grow. All right. Now, in conclusions, we anticipate that the current sentiment suggests the Tyson Foods stock will likely to trade within range of $60 to $65 level. However, with the strong momentum and positive sentiments, a slight uptick could push the stock higher, break through the current resistance and coming to the next resistance level, which is around the $72 level, and it might experience a sudden upward movement. And this has been backed by the recent market pullback, which has no impact at all on Tyson stock. So I would say that this will boost traders' confidence in the potential for further upside rather than the downside risk. Well, and I would say that's all it wraps for today's analysis for Tyson Foods. If you found that this breakdown helpful, I would say please give us a thumbs up, subscribe, and hit the notification bell to stay updated on the latest opportunities. Also, drop a comment below if there's any stocks that you want me to analyze when the opportunity comes, so I can share more smart money insight for you. So see you next time, and always trade smart.